What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're peeking over here at the Bitcoin price chart, and we're actually going to take a look around at all markets to see what's been going on. For the last several weeks, the stock market's been in a big upward trajectory. We reached retracement levels last week. We've seen somewhat of a pull down. We see the bears celebrating and claiming victory. And as we know, for crypto, we've been tied to the stock market primarily for several years. The stock market's actually been moving up a lot. We've actually retraced the entire move down. We've gone back up 61.8%. However, Bitcoin having absolutely none of that, not doing any type of retracement at all. Whereas over the same time frame, the Dow Jones has retraced all the way back up to the 0.618. For Bitcoin, that would be the equivalent of almost $50,000. But Bitcoin has had nothing of the sorts to do with that. But I wouldn't count Bitcoin out just yet. We've talked about this structure a lot over the last week and a half. Still waiting to see if we're going to get a short squeeze to bring us right back up. But of course, people will tell you that's not possible. They'll tell you that we're going into gloom and doom, as we had all the gloom and doom worries down in here. And then the most hated rally that's taken us all the way back into retracement levels. The bears are claiming victory with this move right in here, saying, "See, I told you." However, I wouldn't count it out so quick yet. I have done Elliott Wave counts here on the Dow Jones Industrial Average to say that, hey, it looks more like we actually have just completed Wave 3. We're working on Wave 4, and there's still Wave 5. Where Wave 5 is going to end is really kind of a bigger story for me, as in determining if this is actually an A, B, C correction in here. And that if we start doing sub-wave counts that have happened in here, we could see we had an A, B, C for Wave 2. We had a 1, 2, 3, 4, 5 for Wave 3. And now working on Wave 4. And the question is, how high can Wave 5 get, and can it get above the height of Wave B? But of course, the bears will tell you, absolutely not. We're done. We're rejecting. We're going off into doomland. But I don't think that to be the case. Time will tell. We have gotten back into retracement levels. I don't think this is over just yet. I don't think the pain for the bears is over just yet. They haven't capitulated, right? And bears always capitulate when things get too painful. And where do they get too painful? Usually right in this box right here. That is where things have gone too far and they start saying, "What have I done?" But of course, that is the most dangerous place for rejection. Now, I do understand not everybody loves to hear about the stock market. They're here for crypto, and crypto matters. But throughout history, a requirement for Bitcoin to go up has been that the stock market goes up. If the stock market has topped and it's going to break down and set new lows, one would expect Bitcoin would as well. But if the Dow Jones or the stock market has more room to go up, then there's opportunity there for Bitcoin as well, because that's been a requirement for Bitcoin throughout all of history. And I want to read this to you real quick. We can kind of read the psychology of what happens in these waves as they're occurring. And this is being taken from Wikipedia. If we assume this is wave 1, 2, 3, 4, and 5, let's see what they say about the psychology of each of these waves in here. So here's wave 1. Wave 1 is rarely obvious at its inception. When the first wave of a new bull market begins, the fundamental news is almost universally negative. The previous trend is considered still strongly in force. Fundamental analysts continue to revise their earnings estimates lower. The economy probably does not look strong. Sentiment surveys are decidedly bearish. Put options are in vogue, and implied volatility in the options market is high. Volume might increase a bit as prices rise, but not by enough to alert many technical analysts. So wave 1 is rarely obvious. The previous trend is considered strongly in force, and fundamental news is almost universally negative. Back here in June, what are we talking about? Inflation, right? Well, we're getting a 9.1 CPI print. Fed coming out doing 75 basis points rate hikes. Gloom and doom. On to wave 2. Wave 2 corrects wave 1, but can never extend beyond the starting point of wave 1. In other words, we can't go below where wave 1 began. Typically, the news is still bad. As prices retest the prior low, bearish sentiment quickly builds, and the crowd haughtily reminds all that the bear market is still deeply ensconced, settled securely or snugly, that the bear market is still snugly intact. Still, some positive signs appear for those who are looking. Volume should be lower during Wave 2 than during Wave 1. Prices usually do not retrace more than 61.8% of Wave 1 gains, and prices should fall in a three-wave pattern. A, B, C, three-wave pattern. Wave 3, this bad boy right here, the one that everybody hated. Wave 3 is usually the largest and most powerful wave in a trend, although some research suggests that in a commodities market, Wave 5 is the largest. The news is now positive, and fundamental analysts start to raise earnings estimates. What was the positive news that happened? Well, investors believe that the Fed is turning dovish and that they're not going to be raising interest rates much further, if any at all. Prices rise quickly, corrections are short-lived and shallow. Notice corrections get very small in here. Anyone looking to get in on a pullback will quickly miss the boat. As Wave 3 starts, the news is probably still bearish, and most market players remain negative. But by Wave 3's midpoint, the crowd will often join the new bullish trend. Wave 3 often extends Wave 1 by a ratio of 1.618 to 1. In other words, that it exceeds at least a 1.618 extension of Wave 1. Wave 4 is typically clearly corrective, which, as we could see in the whole way up, there was really no corrective waves for re-entry to happen. However, we're getting something that looks clearly corrective at this point. Prices may meander sideways for an extended period, and Wave 4 typically retraces less than 38.2% of Wave 3. Which, as we can see here so far, this would be Wave 3, and we have yet to reach 38.2%. 38.2% for the Dow Jones is right there at about 32,707. Still another 300 points to go. Volume is well below that of Wave 3. This is a good place to buy a pullback if you understand the potential ahead for Wave 5. Still, fourth waves are often frustrating because of their lack of progress in the larger trend. Wave 5 is the final leg in the direction of the dominant trend. The news is almost universally positive, and everyone is bullish. Unfortunately, this is when many average investors finally buy in, right before the top. Volume is often lower in Wave 5 than in Wave 3, and many momentum indicators start to show divergences. Prices reach a new high, but the indicators do not reach a new peak. At the end of a major bull market, bears may very well be ridiculed. So essentially, this is where we lose all of the doubters. And this is where all the retracements come in. But the doubters and the bears will still remain the whole way up. They will remain massive bears with negative fundamental analysis down in the lows. As the prices rise, they have to remain bears. Why? Because they've been left behind. There's been no re-entry for them to get it. Now the pullback finally happens. They celebrate their bearishness, saying they were right the whole time. But then you go on to Wave 5, and that's where they all have to capitulate and say, wait a minute, I was wrong. But the problem is all the bulls ridicule the bears, and it becomes cockiness, right? So then everybody's a bull. Everybody's on the same side, whereas just recently, everybody was on the same side down here, then everybody's on the same side up in here. And then that's when things really start to pull back. So kind of just like an Elliott Wave psychology of what's happening here, if that count is correct over there in the Dow Jones. So do your own counts, figure out what you think. I know it's set on there. It's the perfect time to buy. I don't ever tell you guys when to buy or when to sell. That's up for you to make up your own decisions. But if it's true, right? If Wave 5 is still around the corner, if that's where finally the bears all capitulate, that's where full-blown risk-on moment comes, that's where all the liquidity flies in, I would think that'd be the best chance for Bitcoin and the cryptocurrency market to catch a pretty big bid, which is what we've been talking about over here on Bitcoin. So pretty crazy that Bitcoin has absolutely not kept up with the stock market, even though it fell with the stock market the whole time, not able to keep up with it. Does that have to do with a lot of the issues that happened in the cryptocurrency market in general, from Luna, UST, Three Arrows Capital, Coinbase scaring customers, making them think they're going to lose all of their crypto? If Coinbase goes bankrupt, who knows? Hard to tell. Your guess is as good as mine on any of that. But there's no question we haven't kept up with the stock market, but also we haven't reached that euphoria point of the stock market yet where the bears finally wave the white flag. And so while there is concern that it has gotten back to a 618 Fibonacci retracement, it has pulled back from these price levels. I wanted to go through the Elliott Wave count of the psychology of what happens during Elliott waves and the technical aspects of these waves as well, and that this pullback that we're having, that the bears are celebrating, still is a technical pullback for a wave 4, in which the most common pullback level for a wave 4 in the stock market is to the 382 Fibonacci retracement of wave 3. And we still haven't gotten there yet. And that the euphoric moment, the capitulative moment for the bears would still be around the corner. And that'll be the big interesting moment to see if that's our big wave as well. So it's been a little while since we've looked at like the macro perspective of the actual stock market. And I do realize not everybody loves seeing things about the stock market, but for my personal perspective of the cryptocurrency markets, I have to, in my mind, say, do I think there's a case for the stock market to go up? And I do understand Bitcoin, for some reason, has not been following the stock market right now. But throughout all of Bitcoin's life cycle, it has been a requirement that the stock market is moving up. So that is a requirement that I'm looking for. And since my bias is belief that there still is at least one more wave left in the stock market, that will be the question of whether or not it does reject from those retracement levels or it does extend above wave B, but that there is at least one more wave left in this actual move. Time will tell if that's right, but you can see my reasoning for why I do. It's when we just went through all the different psychologies and the things that happen between different waves and showed them on the charts and the measurements on the charts that they are all corresponding to what happens as if we've already completed wave 1, 2, 3, and we're in 4 right now. You can make your assessment on whether or not I'm misreading that compared to what the psychology and measurements are. But based on my understanding of what I'm reading and the things that I'm interpreting on the charts, that's what I do see. And due to that, I do believe there's at least another wave up in this move for the stock market. And for that, that's positive for Bitcoin. That's positive for the cryptocurrency market. So we'll see how it goes. We're still patiently waiting to see what Bitcoin is going to do here, if it's going to short squeeze its way back up and bring the altcoin market with it. Otherwise, I do believe that the bears are prematurely celebrating after this market ripped with absolutely no re-entry opportunities. And based on the descriptions of each wave that happens in Elliott waves, we should be nearing the end of this pullback pretty soon. As for news catalysts for this week, Friday, Jerome Powell, the chairman of the Federal Reserve, is set to speak at Jackson Hole on August 26th. Jerome Powell will address the annual Global Central Banking Conference in Jackson Hole, Wyoming on August 26th, a highly anticipated speech that could signal how high U.S. borrowing costs may go and how long they will need to stay there to bring down soaring inflation. So the market is highly anticipating what Jerome Powell will say here. We just got housing figures out. Their goal was to bring down housing prices. Guess what? They are crumbling. We've gotten lower CPI prints since the last time he's talked. Will he reiterate what the market expects and that they're going to cool off on raising interest rates and that they really only have about 75 basis points left in them, or if they plan a whole lot more, or if they're going to stop? We'll find out. But for an example, right, if you were to imagine this, right, and I'm not saying this is going to happen because I have literally no clue. I have absolutely no way to guess that this is actually what will happen. But imagine this, right? We go through wave 1 on the Dow, we go through wave 2, wave 3, and wave 4. And then what happens if on Friday, Jerome Powell comes out and he says, you know what, I think we are actually just going to be pausing on interest rate hikes. What would retail investors do? They've pretty much been trained, don't fight the Fed, and only buy the market when we're not doing QE anymore. We're not raising interest rates anymore, right? That would signal to retail investors who have been going with this interest rate hike idea that don't touch the market until they're done with interest rate hikes, that what are they going to do? They're going to buy wave 5, right? That would be where everybody turns bullish, right? So I don't know if that's what's going to happen, but you could see that narrative happening, right? You could see that's how they could all buy wave 5, if you get what I'm saying. So waiting for some type of catalyst or news event or something that completely changes the psychology of all the bears to make them say, wait a minute, maybe I do need to be a bull and maybe I do need to buy the top of wave 5. Just kind of throwing that out there to kind of prepare that usually at the tops of waves, which we even saw in crypto, when the tops of waves come, they're usually accompanied by some type of bullish news. I don't know what that's going to be. I don't know if that's going to be it, but something to think about ahead of time. So All right, guys, that's going to be it for this one. That's kind of the macro look for the week. I hope that you enjoyed it. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.